Just like any of my other videos, if you scroll down to the description, you're going to see a link to this slideshow. First thing you're going to want to do is hit the like button. Then you can click on this and you can download it, save it. It's yours forever, and enjoy the rest of this video. First thing that we need to understand is that the length of time the trade setup takes to form is directly correlated with the size of the move that will take place. For example, if I have a 3-hour setup on the day, that trade setup can be expected not to necessarily go as far as a trade setup that takes 2 to 3 weeks to form, 2 to 3 days to form, ending in some sort of 3-session setup. Those are going to be your A++ 5-star setups that move the distance. So up here on the screen, you can see this has taken multiple days. We have large dumping days leading into a large consolidation at the beginning of a week, inside day on Monday. First green day, that break structure to the upside goes into a nice ascending triangle sort of pattern, which is a parabolic pattern, and then goes vertical for that large reversal, going back for the order flow, going back for the money. This has taken multiple days and maybe even multiple weeks to form, ending in a 3-day, 3-session setup, leading to that nice large reversal. Over here on the left, you can see what I'm talking about. 3 weeks, 3 days, 3 sessions, 3 hours. Let's say you have 3 weeks in one direction, ending in a 3-day setup, ending in a 3-session setup, and then finally in that last session, 3 hours setup. That is going to be your A++ 5-star things that you want to look for these very large parabolic moves in a direction. Not to say that parabolic moves can't happen over the course of 3 hours. It just might not go 200-300 pips like you're hoping for. We as traders are trading setups, not direction. But how do you know when a setup is actually beginning to form? Well, there are certain signals that you can search for or certain types of days that will develop in order for you to look in the next day for that setup to occur. There are also certain weekly templates based off of the opening range that you can look for to give you an insight into what the next day could do based off of market structure, timing, and the 3-session setup, of course. Some of those signal days could be first red and first green days. Inside bars on the daily chart, also known as an inside day. Those can be a sign of continuation or reversal. The 3 days of breakouts in one direction, that kind of is going to look like a market maker pattern. 3 peak formation, 3 levels of rise, or 3 levels of fall. Those kind of setups, you want structure on your side, and you want to look for those good, strong reversals. You want market structure to be on your side. You want to trade with the trend until the end, as they will say. So breaks in structure, market structure always plays a massive role. I'm constantly checking the 1 hour, the 15, and the 1 minute charts. The 1 hour is a good reference for the higher time frame. The 15-minute chart is usually what I'm taking my trades based off of, and then I'm using that 1 minute chart in order to find good entries. Weekly templates, setups, I'm going to be utilizing my tips and tricks slide with all the different scenarios of opening range style of setups. That includes opening range breakouts, opening range breakout failures, looking for peak formation high and low at both ends of the week on a Tuesday, looking for those good, strong parabolic trend trades or short squeeze, long squeeze setups on the following day. I'm going to get into all those patterns here in a couple of slides. Of course, not going to leave you hanging. All right, so I've got some of those examples listed over here. Tuesday, opening range breakout. Tuesday hits both sides of the range, creating a bit of a heartbeat monitor looking pattern. Monday's failed breakout. Tuesday failed breakout at the other end of the week. Again, giving you a heartbeat sort of pattern, sideways move, spike low, spike high, consolidation in the middle, vertical move. 3 pushes outside of the opening range or 3 levels of rise outside of Monday's range, either to the upside or 3 levels of fall to the downside. And usually those 3 levels of rise or fall outside of the opening range setups are going to be the most important after 2 to 3 weeks in one direction. You don't necessarily want to just look for 3 pushes outside of the opening range on the first week that they've started going in one direction. You're going to want to look for this after 2 to 3 weeks of directional movement. And then you also have Wednesday, Thursday, Friday trend trades on that Friday. Again, they could spike up and then pull back on Thursday, and then Friday, that parabolic move through the high, or maybe Wednesday spikes down, breaking structure, pulls back on Thursday, and then you have a Friday trend trade in that direction. It's a fractal. Everything happening on a higher time frame is happening far more frequently down on the lower time frames. This is going to really be important when you're thinking about breaks in structure, breaks of structure, looking for those directional moves. When you're thinking about the weekly templates as well, when we're climbing on the third week and the third day of breakouts, that setup is primed and ready for a good trade. However, or also, whenever you're thinking about like first red day and first green day, if the week or multiple weeks have been going down, 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 and then you get a first green day on, let's say, like a Tuesday, that trade setup is far more probable to actually play out than if it's just the first week in that direction. That all has to do with fractal markets. The fact that the weekly chart is doing something, the daily chart, and then we're down on the 15-minute, the 1 hour, and the 1 minute, trying to identify these setups and look for the most probable one of playing out, which is why I keep bringing up the higher time frame fractal markets thing. On this, you can see this is a chart of US 30 that we have multiple days of breakouts in one direction. Then you get a first red day over here on this Friday, and a day that pumps back up after making a lower low, pumps back up into the high of the previous week, triggering the high of the previous week in the London session for that trend continuation after this break in structure down into the low, making that lower low after a first red day. So this was a fantastic London trade from the high of the day, high of the session, after multiple days of breakouts, after a structural break to the downside. This was a fantastic vertical move down. A lot of words on the screen. I understand. Bear with me. I promise you it's very important information. How do I know when there is a trading setup forming? Number one, you need to know what the setups are. You need to know how to identify them, and you need to create your own playbook. You can either use my setups, you can use other people's setups. Regardless, whenever you have a playbook and you know exactly what you're looking for on the day based off of that trade, you're going to want to study those templates and go back over and over and over again, studying those templates over and over to burn what right looks like in your brain, which is why I talk about building a study binder that you can review over the course of 3, 4, 5, 6 months and go back and review the information that you have charted and know exactly what you were talking about when you put it on that chart. You need to understand the different market concepts. You need to understand uptrend, consolidation, dump, understanding that these are like pump and dumps, right? These are uptrend, consolidation, dump. Remember the fractal markets, this trend might be part of a higher time frame pullback. So when you think of like a pump and a dump, you want to be looking for a pump and a dump in a downtrend. They've made a lower low and they are now pumping that market back up on the 15-minute chart for the dump continuation. The same thing goes with downtrend, consolidation, pump. The market's in a downtrend, or excuse me, is in an uptrend, and they are now pulling back for a long continuation. Concept of consolidation, the 50% of ranges, understanding that the market will break out and pull back to the 50% for continuations. The market will also break out of consolidations and pull back and then continue. And from those consolidations, you are now looking for range expansions of the consolidated range because everything in the market is timed and measured. Something that Stacey Burke says quite frequently. Trap volume, 3 pushes. All right. You want to make sure that you are understanding how to identify 3 pushes, especially like me, somebody who uses 3 pushes every single day, looking for breaks in structure and breaks of structure, understanding that after those structural breaks, there will be some sort of retracement and it will come in the form of 3 pushes. Additionally, all of my setups that I use are based off of 3 pushes. So like coming out of consolidation and 3 pushes throughout the week, first red and first green day, all of these different things lined up with 3 pushes, which is why most trading systems since the beginning of the 1900s have been using them. The Wyckoff method, Beat the Market Maker, BTMM. Stacey Burke talks about 3 pushes all the time. I think that even ICT uses 3 pushes and things like that. So 3 pushes has been around forever, and once you are capable of identifying it, it can greatly improve your price action knowledge and trading. I want you to become a professional storyteller, reading the market from left to right, almost like a book. You should be able to read from left to right and see all the different details that lead up into a trading setup. You already have a pre-identified trade setup, and you are now going to look at the chart and identify all the things that are supposed to go into that trade setup. Basically like a checklist. You're checking off all of these things, telling the story of what the market is doing, who is getting trapped, how are they trapping them, and is it in alignment with the setup that you are looking to take. Learn to chart effectively. We've already talked about it a little bit, but study binder. With a study binder style of charting, you are making a reference. You're basically building yourself your own course so that you are capable of going back 6 months from now and understanding and knowing what you were looking for on that day. It should have every detail that went into that trade setup on that day. A functional style of trading is more minimalistic. You are looking to only put the details up there leading into your trade setup that you need in order to take that trade. You might be able to see all the details with your own eyes and your own brain, but you don't necessarily need to put them all up there and make your chart super hectic. Doing all of these things first will allow you to properly identify trade setups each day and allow you to create a process for yourself and how to trade each setup. I don't know about you, but I like checklists and I like having a really set in stone process or way of going about things that I can follow. So kind of taking a deep dive into my own brain and trying to portray those thoughts on the screen. This is kind of a list, a way of going about things and asking yourself a series of questions about whether or not your trade is going to play out or if it is currently playing out appropriately. You want to categorize the day based off the trade setup that you've already looked at from the previous day. What was your signal? What is the 3-day template looking like? You're categorizing the day. Is it going to be a sell high day or is it going to be a buy low day, and why? The why is going to be based off of your trading setup. If it's a buy low day based off of a first green day, where are your areas that you should be looking to buy low? For a sell high sort of day, you can have weekly template reversals, first red day, 3 days of breakouts with break-in structure to the downside for a parabolic trend reversal or a long squeeze. Inside day, usually in combination with one of, A through C. So you want one of these in combination with an inside day that can help you or give you insight into what sort of day it's going to be. Buy low, it's pretty much just the opposite of sell high. Weekly template reversals, once again, you can have first green day, 3 days of breakouts with a break-in structure to the upside and 3 pushes back down into the low looking for a parabolic trend reversal or a long squeeze. That meant to say short squeeze. Whoops. Short squeeze. Inside day, usually in combination with, again, A through C. Timing. How do you time the trade? After equity market open, me personally, I trade New York. I am only looking to take trades after 9:30. I don't care if it's a currency pair. I don't care if it's indexes, oil, or gold. I am only going to take a trade after 9:30. And I trade from 9:30 till about 10:30. And if I don't take a trade within that 1 hour window, then I don't take a trade for the day. Looking at the timing of the trades, though, think about, again, markets are fractal. Things down on a 1-minute chart. What is happening? What is the story it is telling? Last 15 minutes of a 1 hour bar. You might receive an engulfment on a lower time frame, turning that 1 hour and that 15-minute bar into a pin. They may have just trapped people at the high or at the low. The first 15 minutes of a 1 hour bar, previous 15-minute 1 hour bar was a trap. Trap is set. Market is ready to explode in the next 15 minutes. You have to think about what is happening. What are they doing to people? What are they doing to other traders? Who are they trapping? What is the story the market is telling? Don't forget to tell the whole story. Was the previous day high or low broken? You need to ask yourself these questions, because if it has not been broken, you're trading on the inside and you should be taking a trade from the inside as a parabolic move to the outside. If you are trading from the outside, it's either going to be a breakout pullback continuation or a breakout and a failed breakout back to the 50% or the other side of the range. Has a previous week's level been broken? Within the entire week, has a week's level been broken? Because if it has not, you are still inside of an inside week. And just as I talked about with point 1, if you are taking a setup from the inside, you should be looking to take that trade setup as a parabolic style of trade from the inside back to the outside. That should be your setup. What day of the week is it? Is it Monday? Is it the opening range? Is it Tuesday? Do you have your initial balance in place? Because if you're trading on a Tuesday, you have Monday's range already set. You can ask your question, number 1 and 2, already have asked yourself that question, because on Tuesday, they might breakout, pullback, and continue. Or Tuesday might be a failed breakout. You need to make sure that you are identifying these details. On Wednesday, do you have a trend or a reversal trade? On Thursday, same question. And then on Friday, usually the market is going to go back for the money. It's seeking liquidity on a Friday, and they will drive that market into the close and go into consolidation. Those are the style of trades that you are searching for on a Friday. Common question I get is, what actually makes it a A+ or A++ 5-star setup high tier quality setup, whatever you like to call it. And I'm here to tell you, it's kind of what I talked about in the beginning of this video. Do I have multiple weeks or multiple days in a direction for that large reversal, or do I have a large range that has created a failed breakout that gives me a lot of space to get back down to the other side of that range based off the weekly templates, based off of signal days and things of that nature? Also, does market structure align with my already pre-existing setup? Because you can get a first green day that doesn't break structure to the upside, and I would consider that a less quality setup because of that factor. So looking at this, 5-star or high quality setups, they should offer you great risk to reward, better than 1 to 3 or 1 to 3 or greater. Like I said, multiple days or weeks in a direction followed by one of those signal days or a weekly template trade. Market consolidates, shifts into expansion mode, providing large explosive expansions of a range. In this example here, noticing it's a Friday, they peaked low, they peaked high, and gave a nice first green day setup on that Friday, breaking structure to the upside and coming back down into the low in 3 pushes, leading into that New York session reversal back up through the high and giving expansions of the day's consolidation back up through the high of Friday and going back for the money on Monday, basically taking out all of this downwards order flow. Now, looking at the 2 best patterns that you can possibly look for in combination with weekly templates, as well as first red day, first green day, or other signals type of days, you're looking for 3-day parabolic peak formation high and low sort of trades, right? They take place or they have been created over the course of 3 days. So, again, coming back to the previous example, but a little bit more detail or different details have been added. Some characteristics of this style of trade is going to be, multiple days of going down, 2 to 3 days, failed breakout, creating a heartbeat monitor style of pattern. Notice that they've came down very aggressively with a failed breakout at the low of this current week on this Friday. They spiked down and then they spiked up and then they pulled back inside and created a range at the end of the day. Consolidation in the middle of the range. That's what I'm referring to here. We have this nice consolidation in the middle. Tightly coiled parabolic channel begins to form, which we have right here. And I do have some additional things that you could look for right here. But within this parabolic channel, a lot of times they will come out to the top of the channel first, and that is what I would call the first mouse of the channel. And then they will come out to the bottom of the channel, and that is the minimum. That is the absolute minimum. At least on a lower time frame, at least seeing a wick of some kind coming out to the bottom of that channel, that is going to green light me to allow me to start looking to take that trade. I've already identified all of this pattern, but then once we get into this channel, I am identifying behavioral aspects of the channel. I am looking at structure within the channel. You can see them making higher highs and higher lows, and every time they slam a bear candle back down, they immediately take it away. That is what I would consider a dragging behavior. They are dragging shorts in a direction, and then you can see the stop hunt to the bottom of the channel right here, and then it immediately once again goes the other way. I would be monitoring on a lower time frame for them to come out to the bottom of that channel, go into consolidation, and give a good reversal pattern back up into the channel. Looking for them to maybe make a higher high, 3 pushes back down for me to get my entry, specifically after 9:30, and then watching that trade go vertical up through previous day's high, up through all of this order flow back towards the high of the previous week. The other pattern that you can look for, regardless of trade setup, is going to be the long and the short squeeze setup. Now, of course, I talked about it earlier. Depending on how many days these patterns develop, determines the size of the move. So if we have multiple days leading to the high of the week, and then you get a short squeeze setup, that could be a higher quality setup compared to if you just have a short or a long squeeze setup on the day itself, markets making lower lows and lower highs, and you're just taking the trade based off of the day. That could be considered a session trade. However, in this trade, you notice the opening range, the market's been going up, up, up. We've got 3 days of breakouts, 2 to 3 days of breakouts. High of week, they've broken structure to the upside, making a higher high, and then you have a break in structure to the downside, creating that nice lower low and a consolidation with them spiking back up into the high. This is them forming the next lower high after making a lower low, and I am looking to sell high within that consolidation. I'm looking to sell high at the high of the session, or just in the high of this consolidation in general for that continuation. And you can see them making lower lows and continuing that low or that downtrend further, even in the next day in the London session over here. And they do it again, lower low, pump back up into the high, and then there's a follow through third push to the low in the New York session, but it is not before, or it is before 9:30. Therefore, me personally, I would not be able to take that trade. But people who are trading maybe in the first hour would be allowed to take that trade, and this would have allowed you to do so. All right, so some things that you need to look at. I've got all of these details down here for you based off of whether or not you're trading long or short squeezes. All right, so regardless of long or short squeeze, you want 2 to 3 days in one direction. For a short squeeze, you want a lower low followed by a higher high. So that higher high would be the break in structure, and that would occur at the low of the week. For a long squeeze, you want a higher high followed by a lower low, and that would take place like this one has at the high of the week. For a long squeeze, you would want 3 pushes back into the high, as this one has. And for a short squeeze, of course, 3 pushes back into the low. For a short squeeze consolidation, again at the low of the week, long squeeze consolidation at the high of the week, and you can see all of those things printed out here on the chart, labeled off nice and neat for that really quality, nice long squeeze setup down. And of course, if I were to flip this chart over, it would then become a short squeeze. So in spirit of using recent events, I am going to show you all the trade that I took on Friday, the first red day trade setup that I was looking at. So this is the NASDAQ. This is a 15-minute chart, and you can see that over the course of 3 days, we have breakouts, breakouts, and breakouts to the high of the week. This was Thursday. This day right here was Friday. We have a large move up, a consolidation at the high of the week, structural levels, and a break in structure back down on the 15-minute chart. And after that break in structure down, they hit previous day's low and pump it back up towards the high and go again into consolidation up off of this low. Now, this over here, this up move on the 15-minute chart is the New York session leading us back towards the high from the previous day. They did not quite get there, and then it started to pause right around the 9:30 time. And that is where I was able to start to look to take this trade. So let's take a look at the 1-minute chart. 1-minute chart is making higher highs and higher lows. The 15-minute chart has already made a lower low. So all I need now to complete my entry criteria, looking for that long squeeze setup after first red day from the high of the day, from the high of the session, would be for the 1-minute chart to break down and make a lower low. So we have a higher high followed by this lower low right here. Consolidation and a large 3-push move, spiking back up into the high, stop hunting anybody who is already short on this move down. You get a M right here, up, down, up, and then this engulfment back down, which allowed me to take my first entry. And once we come down towards the low, I am very conservative with my profit taking. Once we get to the low, I take partials and allow the rest of the pattern to play out. If it were to have gone vertical through that area, fantastic. I can take profits in the area that I had already intended. But if it does something like this, where it still fiddles around a bit more, that gives me the opportunity to look for follow-on opportunity. So you can see that the market then tried to make a lower low, and then it pumps back up again into the high, sweeping this fake high right here. This lower low right here has now confirmed this as a swing high. So this up move back up into the high is just a sweep of the money on this fake high, trading back up into the high, telling myself the story. We're still in a downtrend. Don't worry. Doesn't matter what the candles look like. We are still in a down cycle or a down move because of the market structure. They trade back up into the high, and you start to get this nice fiddle around sort of pattern. Uh-oh, I have messed it up. There we go. Descending triangle, and you can see them spiking aggressively back up into the high, but the close of those large up spiking candles is lower. So like this candle right here that spiked up into the high, if somebody would have bought that candle It immediately takes it away from them and then does the same over again. Spikes back up into the high, but closes lower than that one, not allowing that trader out of into profit. You get a little M right here, which is hard to see, and I do apologize for that because it's a little bit blurry. But you get an up candle, a down candle, an up candle, and then this down candle, and a breakout of that descending triangle, which is where I added back into my position for the rest of that 30 or so plus pips. My first partials was taken at 30 pips, and my second add-in also received a good 30 pips straight down, which you can see from this image here. This was my first attempt at the trade. You can see where I started entering on this candle here, came down, pulled back. I started adding in further as it was falling, and then I did take some partials down in this area. And then I do have the image of the other add-in. Okay, this gave me the second attempt at the trade. You can see where I have taken profits already. And then this descending triangle is starting to play out, and I am adding in as it is falling. It is going vertical. Things are going good. I move to break even and allow this trade to play out the rest of the way. I've already taken 30 pips profit, and then I am waiting for the rest of that trade to play out. But you can see that this was very, very clean on the 1 minute chart structurally and just in general. Lower low, spike back to the high, lower low, spike back to the high, descending triangle for the collapse. Now, normally I would be more excited to watch this go all the way down to the low of the day or even the previous day's low. Obviously, that's not what happened, and that's why I'm so conservative with my profit taking, because I am not in control of the market. I cannot predict what the market is going to do. All I can do is use best judgment and lock in profits where I can. If you do want more examples of all these trades that I've taken in the past week, head on over to my community section here on YouTube and check those out. I post all my trades there and all the explanations as well with the analysis. I do hope you all enjoyed this video today. If you have, please do me a huge favor. It takes 2 seconds to hit that like button, subscribe if you have not already, and enjoy your weekend.